Namaskar. Hello and welcome to PGurus channel. I'm your host Sree Iyer. We have a returning guest, 𝗤𝗏𝗏, and let's welcome him and I'll tell you all about what we are going to talk about. Hello Tom, welcome to PGurus channel. How are you?
I am good, Sree. Thank you very much for the invite. It's good to be back.
So Tom runs this extremely thought-provoking website, Gold, Goats and Guns. And Tom, I'd like you to talk a little bit about your website and also your other interests, because you're a very busy man. And I'm really thankful that you set aside this time, because viewers, this is one thing that I want you to understand. This is going to change the future of your life. 100%. There is not even 1% doubt in my mind. You need to understand this. Maybe you may want to watch this video more than once just to understand where we are going with currency as a whole. So first talk about your website, your podcast, and then I have my first question ready for you. Over to you.
All right. So Gold, Goats and Guns is, it started as a blog, to be honest with you. And since I'm such a popular guest on so many podcasts, I don't have time to really write anymore publicly. But that's where the website itself is now a repository for, announcements of our monthly newsletter, where my partner 𝗥𝗘𝗿 and I go, we take a look forward at the current events of the day. We run a portfolio strategy within that. And it's a mix of hardcore geopolitics and finance to get a sense of where we're headed, where we've been, where we're headed, and all of that. And then, of course, how to try and make sense of it to make some good investing decisions. It's retail investor focus in that respect. The website is a repository for the Gold, Goats and Guns podcast as well, which I put out on an ad hoc basis. Basically, whenever I get a burr up my behind to body where I feel like I really need to clarify a particular issue or whatnot. And we run that all through a Patreon service at Patreon/Gold, Goats and Guns, where I keep the patrons informed on 2 to 3 times a week and run a chat server and behind that. So that's what we do. We're getting to the point where we're almost interested. We're almost thinking about changing the tagline to tomorrow's zeitgeist today, because we seem to always be like just slightly ahead of everybody else, and it's just, I don't know why, but it just seems to work out that way. I don't it's kind of funny sometimes, Sree. So that's what we do, it seems to be working. Let's just put it that way.
So thank you so much, Tom. And viewers, I'm going to give you the links for his website. And what I want to do is, this is, in my opinion, episode 3 of a multi-episode series that I'm doing on the importance of currency in our lives. Episodes 1 and 2 will talk about the history of currency, why digital currency, because this is all about digital currency, but you need to understand what was the need for digital currency and how Bitcoin became so popular. That would be in episodes 1 and 2. Please watch them first, because you need to get a little bit of grounding into this. Also, I'm going to provide 2 episodes on Tom's website podcast that are fantastic, because you need to understand that after you watch this episode, because that takes this even deeper. One with Caitlin Long, 213, episode 213, and another one with Vince, episode 220. And these 2 will give you a much bigger perspective. But don't jump there before you listen to this. But you can. I mean, if you feel like you can understand that. But first, let's start with a simple question, because again, this is something that people would need to know. What is the difference between Bitcoin and the family of stablecoins, in your opinion?
Well, Bitcoin is a bearer asset. It just happens to be a digital bearer asset. So, I mean, like gold, like bearer bonds used to be, in that it's a digital asset that is uncounterfeitable and moves with the user, moves with the owner wherever they go. You own the private keys to the unsigned transaction outputs that represent the coins. Those can be transferred, custodially from person to person, full and complete ownership. You present the keys to that particular set of Bitcoins, and they're yours. They trade as any kind of any other asset in relation to a currency. The Bitcoin can be priced, because it's an asset. Everything is priced in currency, right? So at the end of the day, let's back up for a second and remember that when we quote a price for something, the cigar, the shirt, the books behind me, whatever. We always talk about the price, right, in the currency, but we never really remind ourselves that it's always a numerator and a denominator, right? So this shirt cost me $20, right? It's one shirt per $20 US, or 1/20 of the shirt per dollar, right? You always have to think of things in forex, in terms of like a forex pair, or as a fraction, one over the other. So Bitcoin trades against the dollar, and currently it's trading about $109,000 per Bitcoin, or right, or the inverse of that per dollar. In order, $1 buys you 1 over 109,000 Bitcoins, right? 109,000th of a Bitcoin. So it's no different than the British pound, or in that respect, or the euro, or any other currency in that respect. It's an asset. Barrel of oil, an ounce of gold, an ounce of silver, whatever. A stable coin is a digital asset that is indexed to a currency, so that it, like in the modern world, let's back up and get away from digital assets, and let's talk about pegged currencies like the Hong Kong dollar or the Saudi rial, both of which are pegged directly to the US dollar. So, but not at a 1-to-1 basis, but in the case of the Hong Kong dollar, between 7.75 and 7.85 Hong Kong dollars to the dollar. That's it. And the Hong Kong Monetary Authority, the Central Bank of Hong Kong, manages that peg by buying and selling the two currencies and the bonds that underlie them in order to maintain that peg. Right? There's a market mechanism behind that peg. The Saudi rial is handled much the same way. A stable coin says, hey, why don't we create an asset that's a proxy for a dollar? Right? That's it. We have a lot of them out there. We had more of them, and then, in my opinion, the Federal Reserve executed a lot of them back in 2022 and 2023 to get rid of the ones that they didn't like. And I think that if it wasn't the Fed, then it was our banking system. Somebody did it. I happen to think it was the Fed. I could be wrong about that. But when it was all said and done, there was one major stablecoin left. It's known as Tether. And Bitcoin, on the Bitcoin exchanges that are out there, Kraken, Coinbase, Gemini, whatever, all generally trade against Tether, or another stablecoin called USD coin, which is what it trades against Coinbase on against. Now, what's a stablecoin? It's just a token that represents a dollar. Now, the question then is, what's backing that token? It's a good question. A lot of the fake stable coins that were executed by the Fed, nothing was backing those tokens other than other shady crypto scam assets underlying them. FTX, Terra Luna, blah, 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 blah. They were all easily blown up because they didn't have any reserves behind them. What they had behind them was a whole bunch of other pledged worthless crypto assets that people made up by starting a blockchain. That's it. So, and what's a blockchain? A blockchain is simply a distributed database that of all the previous transactions hashed up on a regular basis and then immortalized in a so-called block. Say, blah, this many transactions happened on this network over this period of time. Here are the transaction outputs. It's just basically it's a big distributed ledger, but it uses an encryption algorithm to ensure that that the history of that ledger can ever be changed. So, and the trust is built up over time in that system, the more it operates without anybody introducing false information into the transaction record. So that's what Bitcoin does. Tether is just a token that nominally uses a blockchain as well, but the point of Tether is that it's actually backed, in this case, and there are other stable coins that are now operating this way, that are actually backed by some other asset. Well, in the case of Tether, the thing it's most backed by is short-term US T-bills, meaning 1 month, 2 month, 3 month T-bills, maybe some 6 months, some longer duration, that they have a portfolio of assets that back the number of Tether they have in existence, that they say they have it floating around out there, which the current market cap is about $157 billion. So that's what Tether is. That's what a stable coin is. And the amount of tethers that are in existence are managed by Tether, just like the Hong Kong Monetary Authority manages the peg of the Hong Kong dollar. Tether does the same thing, keeps it at $1 and 0.0 cents, and it doesn't move very often. And it moves in a very, very tight band. When the market is dislocated, Tether can, quote unquote, lose the peg. Either there's too many and it goes up or down below, but it's Tether's job, it's the company's job to maintain that. And the more liquid their portfolio and the more assets they have in their portfolio, the less often that those attacks will have Tether break that peg. It's been very, very stable.
So question for you. Did you say, did I hear you say that they have in Tether assets worth $157 billion, which is a portfolio of short-term treasury bills?
They actually have more than that. They actually have more than that, because remember, they have, remember, most of what Tether is doing, actually, Tether's reported quarterly earnings, because they have to report after the SEC took them to court, or Letitia James in the Southern District of New York took them to court over a fraud case, which they won. But what they wound up having to do to settle that case was to issue quarterly statements of what their balance of what their portfolio was. So effectively, you need to report your earnings. That's fine. They're like, okay, here's our quarterly report. Tether last year made $13 billion on its portfolio of assets that it's using to back Tether. Tether is actually overcapitalized as a stable coin. Meaning there's more than $1 worth of assets than backing a Tether than what Tether trades against. It's not just U.S. Treasuries or U.S. T-bills. There are also some notes. There are also some bonds. There's also some corporate paper in there. There's also some gold, and there's also some Bitcoin. They own all of those things in their portfolio, and they manage their portfolio, and it's transparently, and for whatever value of transparency you want to place on their reports, because that's up to you. But Tether's quarterly accounting is public knowledge at this point. So it's a very well run company, and they're now actually apparently branching out into other stable coin assets like tokenized gold that'll trade as a proxy for physical gold, and other things. And these are actual currency units you can trade. While mostly they're traded on Bitcoin exchanges to trade against Bitcoin or other digital assets. What's interesting about what Tether is doing is they're now moving Tether out into the real world and issuing wallets and ATMs and everything else, so that Tether is now being used to settle US dollar equivalent transactions all around the world. They have over 400 million users as of 6 months ago. It's probably more than that now. What that means is Tether's being moved into the quote unquote the third world, or Africa, Central America, South America, and being used as a method of payment. And so in effect, what Tether is doing is it's doing an even better job of internationalizing the dollar without having to go through a central banking system or any kind of banking system, because it's just existing. It just exists on the internet. People have their Tether on their phone. They use them. They transact for them, and they buy melons and shoes and everything else with them. And as long as the merchant accepts them, which they do, then it's a currency. And
it's the convenience of not having to carry a dollar bill. Rather, you just do it on your phone, and it's the same thing as far as the other person is concerned, right?
And it's backed by a blockchain, which then creates the opportunity, which then creates a trust within the system. It's not the same level of trust as Bitcoin, mind you. Don't get me. I mean, if it is, great. I don't happen to think it is or it isn't, and I don't really care in that respect. The point is that there's a lot of people out there calling for the end of the US dollar, and Tether is very rapidly actually internationalizing the dollar in a way that we've never seen before. Because now the dollar is being used as a proxy through Tether in areas of the world where the dollar couldn't reach before, because in order to get dollars in the past, you had to go to a bank, exchange your local currency for dollars through the bank, pay a fee, do the thing. And of course, then, you know, in the old system of how currencies were printed by governments was to use a Bank of England style central bank that issued debt to issue the currency to then trade against the other currencies. And lo and behold, the central bank and the government of that country is pulling a vig off of every transaction you do. That is not what's happening anymore. Tether just trades, and the more tethers that are demanded, they go out and they buy assets with them, because in order for tethers to be created, they got to go to Tether to get them. Tether has to go out and buy something as an asset in order to have a portfolio of assets that is able to hold the peg. They keep most of it in highly liquid tradable assets like U.S. Treasuries, or in this case, U.S. T-bills, to handle redemption demand on a per day basis. And so as long as they can do that, and frankly, it's 100% capitalized. There's no leverage in that system like the term.
I was going to ask you, is there any CRR? You said no. So that explains that question. Yeah.